he turned a $40,000 account into what now is
$500 million.
$500 million.
No way.
All of these people are tremendously obsessed with the markets and devote their entire life to it. We're talking about the fireman, for example, gets up at 3:45 to check the markets and doesn't take his last look until 8 p.m. Not saying that's the way you want to live your life, but that's what he does. The musician I mentioned would eat, sleep, drink, market research, and sort of morning through late night would just be studying markets and so forth. One prop trader talked about how, of course, being there the whole trading day, but then after the trading day would be reviewing his trades and making notes and keeping a journal, and then would even come in on the weekends and we'd be taping his trading, and he would replay his trading both fast and slow, faster than normal, like an athlete, like a baseball player taking a heavier bat before he gets up to the plate, so the regular bat seems lighter. So he did that. Plus, he did it slower, so he could see exactly what he was doing wrong and stuff. But that was on weekends. So you're talking about just all-consuming dedication and hard work. And that was definitely a unifying theme.
All right, folks, here we are on Trading Nut. We've got hopefully a familiar face. It's Jack Schwager on the show. Welcome to Trading Nut for the very first time. I know we tried to get you on ages ago. Yeah. This guy is a legend in the trading space, created the Market Wizard series, and we're going to talk about his new book today. So, Jack, welcome to the show finally.
Thank you.
Look, we're right on the cusp of, I suppose, the official publication date. I think it's like a couple of days away. It's a completely different take on, I suppose, how you've done the Market Wizards before. Do you want to talk us through that and why this book is so different and what people are going to take away from it?
Sure, I'd love to. First of all, it is in the same format and style and feel and philosophy and intention and all of that as the past Market Wizard books. This one is, the difference is, well, first of all, first time I had a co-author. It hasn't changed the way the material comes out, but there was a co-author, George Coyle, and who was integral, and actually did all the heavy lifting on the verification, which was substantial for this book, and of course, the part of the writing. The other difference is that the group of traders is without question the youngest cohort of any group of wizards I've interviewed. So in this book, if I remember correctly, 6 were, I would say 20s and 30s. I think some are still in 20s. So I say 6 were in 20s and 30s, which is very young because I'm looking for people with track records typically of 10 years and preferably 15 or more. And then there were 2 in their 40s, and the senior one had just turned 50, so basically, so this is a very young group of traders. But otherwise, the style of the books and everything else is pretty much the same.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Yeah, and I suppose it's probably a sign of the times, really, isn't it, in terms of, I mean, I've interviewed traders who are very young. Like I think the youngest I did was 15, and he was like, his understanding of what price action was doing and how to read a price chart was phenomenal. I mean, what do you sort of attribute that to? This kind of skew to a younger age for
I guess
really good results.
The internet and media, social media, the dramatic drop of brokerage commissions and various things of that nature. So all of them coming under the bailiwick of technology, I guess. So it's put a lot of the nuts and bolts of trading into the hands of anybody, really, and it's opened it up to everybody. And then I guess it's one of those things where there's just more interest in trading than there used to be. And if people are, I guess one thing is it seems like the younger generation is more, maybe not more, I don't know. I guess there's always been people who've been gambling oriented. And while I don't view trading as gambling oriented, although it is practically speaking for most people because they don't do what they need to do to make it trading, but are really almost using it as a gambling tool. But insofar as you have all of the sports betting and the prediction markets now and all of that, this becomes another similar avenue. But there is an important difference here: is that while with no skill, the odds are still against people like anything else. But it's not Las Vegas, where no matter what you do, you have to lose over the long term. Because here, if you do things right, it is not a crapshoot. There are lots of inefficiencies, as demonstrated by the fact that I keep on coming up with people who have made incredible fortunes from nothing over long periods of time. Now, you can be lucky for a couple of years, but for somebody who makes a lot of money just over both bull and bear market, that fortune sort of builds throughout the years, then that's not luck. I mean, anybody can get into a bull market like we've had over the last few months and do very well, even if they know nothing. But to make that long term, it's a different story.
Yeah, so you've had some interesting characters on there, like a security guard, a volunteer firefighter, who've all managed to do some ridiculous numbers, like 5,000 to 100 million, in like 12 years.
Wait, that is an understatement, because he's a Swedish security guard. That means he's paying Swedish taxes out of his winnings, which is substantial. So it's not compounding like it is for some other people.
Right. And so I mean, out of all these traders that you interviewed and got on the book, which one was probably your favorite from a story point of view?
Well, I like quite a few of them, but if I were to put a gun to my head and you asked me for the favorite, it would probably be the the third chapter, and it is the only time I've put an anonymous interview into one of the Market Wizards books. So this is the sixth Market Wizards book. And on one past occasion, I mean, I always guarantee the people I interviewed that they'll get a chance to review the thing and all that. And for reasons that had nothing to do with what I wrote, but one of the traders backed out after I'd written the piece. So I in the past book, and I kind of convinced. There was one piece that I really wanted to include. So let me include these 2 pages, and I'll call you Trader X, and he agreed. That was the only time I had any anonymous material. But in this book, there's an anonymous chapter, and not only is there the chapter, it's the longest chapter. And not only is it the longest chapter, it may well be the longest chapter of any Market Wizards book. And this trader started out as a musician. He was in prestige music school, and was very passionate about music, and has this attitude about mastery. And he was into master music, but then he found trading, and he found that even a little more enticing, and he decided he couldn't do both, and so he left music school. I'm hesitant to say dropped out, because he was voluntarily. He didn't. It wasn't that he was struggling or anything. It's just that he had another desire, and so he went. So he decided if he was going to succeed as a trader, he had to be a master of the craft, and he couldn't do that going to full time in music school, and so that's what he. So he ended up ultimately, and interestingly enough, he fluffed out. He blew up his account several times, but ultimately he turned a $40,000 account into what now is $500 million.
$500 million?
$500 million.
No way.
I mean, quite an amazing story. And along the way, he occasionally broke his own rules, and those led to some very large losses. And when I'm saying large losses, I'm talking like 50 million, 100 million type of losses. And those stories are incredible too. But he's now at a point where he says that's crazy, So he's now set up things so he automatically cannot do that. They'll get sold out of positions at certain points. But that story is, I found, totally incredible.
Now, we talk a lot about strategy and mindset here on the Trading Up podcast, but that doesn't really matter unless you've got the right environment to trade in. So if you're struggling with a prop firm, then I recommend checking out our partner, propfirmmatch.com. These folks have got a massive database of prop firms, got them all verified there with customer reviews. It's completely impartial and transparent. It's worthwhile checking them out. There's a coupon code and link in the description that's going to help you save some money at checkout too. And what markets was this guy trading in timeframes? Have you got any insight into that?
Stocks.
Stocks. Okay. Yeah.
Started out selling short, small cap stocks. That's all he did in the initial years, but then got too big for that and then transitioned into other strategies.
And so out of all the markets, if you're going to say like what would be the most lucrative, obviously that guy managed to make $500 million. But what market would you go to look? I tend to see more people make money in these markets.
These traders, a common theme was as they got bigger, and a few of them started, for whatever reason, a few of them started selling small cap stocks, which is not a scalable strategy, and also a dangerous strategy. So I should mention that. But once they got once they made their first few millions or beyond 10 million or whatever, they had to sort of find other ways for these traders who started that way. They had to find other strategies, and this trader, now would be trading, larger size cap stocks and predominantly from the long side.
And so, what common elements did all these traders have from when you look at what they've done? What kind of common things could other people take away and go, okay, well, if I was going to sort of hone down what I need to do myself, these would be like top 3 things.
Yeah, the first thing, which is always the case in this book and other books, and it's true of almost all, and I always say almost all because there's always a couple of exceptions, but virtually every market that I've interviewed, and certainly all of them in this book, there are no exceptions, will probably tell you that money management is the essential element over everything else.
Wow.
Sure, you've got to have a method, you've got to have an edge, you've got to have the discipline to execute, you've got to put in lots of hard work, you've got to be able to have control of your emotions and all that affects your trading. On and on, there's all these lessons that come out. But the one absolute necessity is money management. And as demonstrated by many of the traders in this book, where when they didn't have the money management element, they either completely wiped out or did serious damage to their account.
Right. So money management was a big one. What about did these people learn from somebody else to get the skills, or were they all self-taught?
Yes, that's another thing. Yeah. So quite a few of them did have mentors, or like in the case, we'll take one, the Swedish security guard, Christian Kulamagi. He has a great quote in the chapter. He says, "I haven't invented anything. Nothing I do is original." He says, "Everything I do, I've gotten from somebody else." So he kind of got his stuff from social media. He kind of attributes where he got it from in the interview, and he made those. He went through many different. He tried different things, and he studied different methods, and all of which not were his own original ideas from other people. And he found those that worked for him, and then turned them into his own by trading him in his own specific ways. And so he basically he got his ideas off the internet essentially. One trader, Breitstein, he was in a prop trading shop, and most of them are in New York. And it turns out their best trader had just had a child or something and wanted to move out of the city and move to Princeton and open a satellite office there. Now, he's a young guy and just out of college, as are most of the people hired initially. And everybody prefers like to be in New York. It's more fun life than being out in Princeton. And but he recognized that this other trader was the best trader in the firm, and he wanted to learn from that trader. And so that trader turned out to be his mentor initially, and then of course he developed his own methodologies, but that certainly got him started. And he's not the only one. Others had mentors. Some though, others though were completely self-taught. So it's a mixture, but definitely some people did have mentors that were influential and instrumental.
Mm. Yeah, and it sounds like did anyone actually sort of have a mentor and then go, right, that's the only thing I'm going to do. I'm not going to elaborate on it at all. I'm just going to follow those rules step by step and execute. And that was it? Or did they all kind of like elaborate on whatever the mentor taught and find their own unique way of doing it?
No, in fact, I would say it's quite the opposite, because one thing you don't want to do, even if you have a really good mentor, is you're not trying to duplicate what they do. You're trying to learn. So there's a big difference here. So one lesson I always try to bang across in my books is don't try to get a trading approach on a silver tray. That never works. It's not going to fit for you. You're not going to have the confidence in it. You're not going to apply it the right way. Yeah, you can learn from other people, that's for sure. And you can build your own strategy with getting other ideas, whether it's from the internet or books or whatever. But you have to ultimately find an approach that fits what you believe in, what you want to do, what you can trade, what's emotionally comfortable, what you can find an edge in, all of those things. So ultimately, and you'll see it in my books, every time I interview somebody, their approach is different.
Mm. And so from a, you talked about money management, from a sort of seeding capital point of view, what were some of the unique ways, or did everyone start from a fairly high balance to get their, trading underway?
Well, money management, in terms of specific money management approaches, they each have their own, approach, but ultimately it comes down to having a maximum amount you're risking on one trade and not getting over leveraged and things of that nature. And the specific thresholds that people define is dependent on their own methodology. In some cases, people may take more risk on a trade, but they'll do that when they have a very strong conviction. So it really varies from individual to individual. But I can give the general advice I would give, which is simple to follow. Well, simple to say. I think it's simple to follow, but some people may not feel so. But which is very effective and which anybody can use, and you don't have to read a book to do it. And that is simply the concept of figure out how much you're willing to risk on any trade. And whenever you enter a trade, you enter a stop at the same time. So you kind of limit your loss on that trade to a predetermined number, which you decided with the objectivity of not being in the trade yet, rather than waiting until you're in the trade and get emotional about it. And that is a approach that was succinctly stated by one of my Market Wizard interviews, and actually the first Wizard book. That was Bruce Kovner, who said, "I always know where I'm getting out before I get in." Very, very sage advice.
Yeah.
Which I follow myself, by the way.
Right. Now, what about algorithmic versus discretionary, manual trading? How did that split across the book?
Okay, so I've interviewed both kinds over the years in every book. In this book, there were no algorithmic traders; they were all discretionary. One reason for that is, and in the last book, all but one was discretionary. And in most books, the majority, a significant majority, are usual discretionary. And the reason for that is that it's very, very, very difficult to get a Market Wizard type of record. And let me back up a second and explain what that means. What I look for is one or two things when I do these books. Either somebody who took a relatively modest amount of money and turned it into a large sum, like like some of the ones we mentioned. Certainly, 40,000 to $500 million is as good example as I've ever come up with. But there are others in the book who've done also along the lines similar type things. That's one way, and the other way is to have kind of phenomenal return risk. As in this book, one trader has no losing months ever, and another that's the volunteer fireman, and doesn't make a fortune by any means, just makes a living, but he has no losing months. And another trader who himself trains traders, and his own account has had like 5 small losing months over. Well, we couldn't document the whole period because the records weren't available, but he's been trading since 2000 or whatever. And I got confident that he had very few losing months in the period we couldn't document, but during the period we could document, it was 5 losing months, all tiny. So those are the types of things when I say market. Now, you don't get those type of records. Very difficult to do those systematically. It usually requires an extraordinarily skillful discretionary trader. So that's why that's discretionary. And I just want to make one I want to qualify it. That's what I'm looking. I want to qualify it. There are people who've used algorithmic approaches to do phenomenal. Like one trader I interviewed had Thorpe in one of the books, or the most famous one, Renaissance, maybe the best track record ever. Who I couldn't get to be interviewed, Jim Simons. But those firms. Well, let's talk about something like Renaissance. Firm like that, it's not doing a system like people think of it. They're literally trading tens of thousands of securities across the world and have 100 plus quants coming up with formulas, looking for tiny edges. They're looking to create like 100 different casinos, like each, they may trade one instrument against 3 other instruments and look for less. They're looking for just to pick small amounts of money, and the whole thing is always diversified very well. So there's no net and market exposure, no sector exposure, all of that. So they're putting together this highly complex quant model, which has supercomputing power behind it. God knows the amount of code and all that. But that's not what people think of systems. That's the only example I can think of where algorithmic trading, and maybe AI will get there, I don't know. But that's the only example I can think of where algorithmic trading really generates market wizard type results.
Yeah, it's interesting. You kind of think that given the time we are in now with AI, it should be shifting, but I don't know if it will. I mean, I don't really know if it will. I mean, what about so given the fact they're all discretionary, what about from a mindset point of view? Were there any common elements you noticed when you were interviewing these guys? They all tended to be like this, or at least they had some kind of skew in one direction so that they could, I suppose, overcome the greed and fear and whatever else comes with trading.
Well, a commonality that you would see is all of these people, really all, tremendously devoted, obsessed with the markets, and devote their entire life to trading life. So we're talking about the fireman, for example, gets up at 3:45 to check the markets and doesn't take his last look until 8 p.m. Not saying that's the way you want to live your life, but that's what he does. The musician I mentioned would like eat, sleep, drink, market research, and sort of morning through late night would just be studying markets and so forth. Some of the other traders, like the prop trader, one prop trader talked about how, and of course, being there the whole trading day, but then after the trading day would be reviewing his trades and making notes and keeping a journal, and then would even come in on weekends and we'd be taping his trading, and he would replay his trading both fast and slow, faster than normal, to kind of like an athlete, like a baseball player taking a heavier bat before he gets up to the plate, so the regular bat seems lighter. So he did that. Plus he did it slower so he could see exactly what he was doing wrong and stuff. But that was on weekends. So you're talking about just all-consuming dedication and hard work. That was definitely a unifying theme.
And did these traders kind of swing trade mostly, or were they scalping or something else?
The approaches were all different, and some of them are still very short, like the volunteer fireman. Long trade for him is half an hour. That would be a winning trade.
Right.
And his losing trades, he's probably gone in the first minute or two. So some are extremely short term. Some started out like Lance Brightstein started out as a prop firm. In fact, the prop firm only allowed day trading, so he started out very short term. But then he left. Eventually, he wanted to pursue longer term trading, traded his own account, and he made multiples of what he made for the prop firm doing it that way. And so he still initially starting out still relatively short, a week or two, but gradually lengthening. And true of the other traders as well.
And would you say that all these traders had some kind of base of data that they based their strategy off, i.e. they went and back tested it for X number of years or whatever it was before they sort of got confident in this is what I'm going to go forward with? They
did. For example, the volunteer fireman, his approach is he's a real expert on merger arb. So he reads all the filings, he knows all the nuances. He's actually able to beat the bots because he can exploit situations where it's too complex and nuanced for the bot. I mean, if there's a headline comes out, the bots will be everybody. But he finds those situations where there's enough nuance that the bots can't take advantage of it. For example, some merger arb is announced and the market rallies. Kind of, he's researched everything totally, knows it hard, knows it completely, and he knows that in this particular merger, it's the company is in Maryland instead of Delaware, and that doesn't mean anything to anybody. But to him, he knows what that means is if in Delaware, it's very easy for the merger to go through, difficult to stop, whereas in Maryland, it's just the opposite.
Right.
So his edge is knowledge that he's gotten through research. And the musician, like studying, also getting a lot of information from, initially when he was doing the smaller cap stuff, he would know companies, what the company's financial situation was, look, again, going for 13D filings and find those companies that had deals where they were burning cash and had made unfavorable deals because just to survive, and like selling convertible bonds, that if the market went up, the stock would get crushed. So he kind of knows that, and then he waits for some sort of. They always manipulate. They always come up with some news story to move the stock, and he knows when that news story is just a bunch of bunk, and that's how we would go short. And that's how he made his initial millions. But again, it was through a lot of study. So research and Kulamagi, I mentioned the security guard, ex-security guard. He I don't know. He went over hundreds of thousands to try. I think he's at tens of thousands, but it's probably hundreds of thousands.
Yes, it sounds like you got a mix of like fundamental and I suppose more technical price action kind of traders in there, which is great. Now, what about you mentioned journaling? Do all of these traders use journaling software, or some of them?
That's a lot of times. It's typically their own, just to keep their own notes and in their own way. And most of them do. Most of them do, and it's very critical. Literally, one of them says, and it comes up almost in every chapter. One of them says, a number of them do this every day because it's very important to do it on the same day while it's still fresh in your mind. And they'll review it daily, weekly, sometimes quarterly, and it becomes a very essential part of their process to drive into their mind the lessons they've learned from trading.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
Well, look, Jack, it's been fantastic having you on. We could probably go on here and find out all about the book, but I think people should probably go and get it. What is the best way to find out more about you and what you do and the book and get their hands on it as well?
Well, the book's available, at every bookseller, Amazon on down, and it can easily be found. I used to have a website, but I stopped keeping it up, so I don't have a particular website to drive people to. So basically, like I said, the book can be found anywhere. I do tweet one of the things like quotes from the book and stuff from the books and stuff like that. Other things, not a heavy tweeter, but I do, and that's at Jack Schwager, just at my name. And other than that, I'm not putting out stuff. My co-author George Coyle does put out a lot more stuff and has a blog, and his stuff you can just go through if you just put in his name, George Coyle, it should come up. Coyle being Coyle.
Brilliant. Well, look, folks, what we'll do is we'll hook some links up below in Jack's show notes page there on Trading Nut. Whilst you're down there, hit subscribe, like, and the notifications bell, and we'll see you in the next video. Thanks for coming on, Jack.
Okay. Thank you. Have a good one.